even though it's just beginning, commercial real estate foreclosures are up. What is happening, DeRosa Insiders community? This is Matt Faircloth, and welcome to the Cash Flow Digest. My name is Matt. Our company is called the DeRosa Group, and we are a real estate company dedicated to transforming lives through real estate and teaching other operators just like you how to build a business just like we did by transforming lives through real estate and seeing the human side of this business as well. That's what we're all about. We're about conveying that message. So if you guys love that, we love you too. And we want you guys to love this show by giving a like. If you guys are watching a video of this on YouTube, if you guys are watching a video of this on Spotify, give it a big thumbs up and a heart too. Love to hear from you. Hey guys, listen, on this show and on the Cash Flow Digest show and here on YouTube, I've talked a lot about how commercial foreclosures are changing, and there's trillions of dollars with a T in debt coming due. 2.2 trillion in debt is maturing over the next couple of years. Okay. I believe that we're only seeing the beginning of that enormous pig working its way through a python, so to speak, that all that is just beginning right now. And even though it's just beginning, commercial real estate foreclosures are up 117% from where they were last year. That, guys, is just the beginning. Now, the office, of course, is the largest sector to hit. As I've said before in a lot of my commentary, office is by far going to be the biggest sufferer of all this. But not, it doesn't leave retail or even a multifamily not at risk with regards to commercial foreclosures. So there is a larger contagion. There's a larger problem, and there's some videos that you guys can look up on YouTube for folks that are big talking heads making commentary on how this may affect local banks. I also shot a video on this on how I don't believe it's going to affect local banks, because a lot of that, what people don't realize, read between the tea leaves, is a lot of the 2.2 trillion in bank debt coming due is owned by behind the scenes investors. It's owned by behind the scenes investors, owned by Wall Street, owned by a lot of folks like that. So it might not be directly owned by local small community banks. They're going to feel the pain. Some of them will, but not all of them are going to all just go bankrupt, as a lot of folks have predicted. This is not what I believe is going to happen. I think that a lot of investors are going to feel it. It'll make investors, not investors like us, I'm talking about people that have billions of dollars into these things. Those investors are going to want their money back one way or another. And so you're likely going to see foreclosures, maybe a little less workouts as these things come due. Not a lot of those things have happened yet, but I believe we're only in, like, say, the first, maybe second inning of the effects of this big albatross of debt working its way through the market. So if you are an active investor, as we are, what you can do is plug into one market, right? And keep your ear to the ground on changes happening in that market, maybe on foreclosures on the way, by talking to maybe local small community banks, but also by talking to brokers that are aware of folks that are over their skis or underwater, or really, really need to, maybe don't want to, but need to sell. And that's how you're going to get the inside track. The way that we're going to take advantage of opportunities like this as they come due is not going to be by just sitting by your computer and waiting for someone to email you a apartment building that's 50% price as compared to what it was just a year ago. Not going to happen. The only way you get a word on inside scoop deals like that is by being on the inside. And so plug into those markets, get to know those brokers, and they might say, hey man, listen, I'm not going to put this local, but this public, but that seller right there has just told me that they're at 70% occupancy. They owe a lot less. They owe more than what the property's worth. And maybe they're looking to let it go for a good deal. And they've even had some conversations with their lender about letting it go on a short sale. Short sales are not happening yet, but they're gonna. It happened in 2008. I was there investing when that happened. And I believe it will eventually happen again. And the only way for you guys to be on the loop on that is to plug into a local market like we tell people to do in our DeRosa Multifamily Accelerator program. You want to hear where the cool kids are? They're over in the Accelerator program. So maybe Nabiku can pop a link for you guys to hear more about Accelerator. Quick shameless plug. We do free, capital F, free masterminds every week. Me and my partner Hervé do one on Tuesday and one on Thursday, talking about real estate shop with folks. This is a free 1-hour education program for just to mastermind with a few people, a few investors about where they're at in their portfolio, for me and Hervé to give them some advice on where they're standing with things. So if you guys want some free advice and you want to hear more about our Accelerator program and how a financial investment from you in yourself and your business with our mentorship will help you get to the next level. This is like an introductory to our accelerator. So maybe consider signing up for our free masterminds on Tuesdays and Thursdays, where we can go and talk a little bit of shop with you and also tell you a bit about how our accelerator program will help you guys get to the next level.